Nvidia stock is edging closer to $500 per share following its remarkable second quarter earnings report. The stock was still up more than 230% this year. In this video, I am going to focus on one many are asking. Has Nvidia reached its peak, or does it possess significant potential for future growth? Before we dive in, I'd like to ask you to subscribe to our channel. It doesn't cost you anything, and it supports us here on YouTube. Nvidia's recent earnings results stand out as one of the most impressive in corporate history. Not only did the company surpass predictions from analysts, but it also holds even stronger projections for the upcoming quarter. For the second quarter in 2023, Nvidia achieved record-breaking revenues of $13.5 billion. This marks a substantial 88% increase from the previous quarter and an impressive 101% surge from the previous year. Forecasts from analysts anticipated revenues of $11.2 billion, so Nvidia's actual result represents a remarkable 21% beat. Earnings per share, or EPS, came out as a beat of 30%. And the company also reported earnings per share of $2.70, exhibiting an outstanding 429% rise compared to the prior year, and a nearly 150% surge from the previous quarter. In other words, while Nvidia's stock price escalated by 300% in the past year, its earnings skyrocketed by over 400% during the same period. As a result, despite a huge rally in 2023, Nvidia's current price-to-earnings ratio is actually lower than what it was a year ago. The current market dominance of Nvidia, particularly in the realm of its H100 GPUs, has exceeded all expectations. With gross margins surpassing 70%, a figure typically associated with software companies, Nvidia's performance in the hardware market is nothing short of remarkable. Such high margins in hardware are unusual, but this success is the outcome of near monopoly status in the fastest growing market worldwide. As for the next quarter, Nvidia foresees revenues of $16 billion, reflecting a quarter-over-quarter increase of 15% and a year-over-year surge of 269%. Moreover, the company projects gross margins of 72% for the upcoming quarter, suggesting the potential for another round of exceptional figures in the near future. We should note that all the big tech companies, such as Amazon, Microsoft, and Google, are currently engaged in designing their own data center chips. However, these efforts are primarily focused on reducing dependence on Intel and AMD CPUs. So far, there is no replacement for Nvidia's GPUs. Now, many of you may wonder why that is the case, so let me explain. We know AI computing involves training. The process of training needs to assimilate patterns from extensive sets of labeled data, much like GPT-4's training relying on huge amounts of human-generated textual data. Besides training, there is another concept called inference, where a pre-trained AI model generates predictions for new and unlabeled data it hasn't encountered previously. Again, if we use ChatGPT as an example, inference is when you type a new prompt to ChatGPT and it generates a new response. The computational costs between training and inference is substantial. Training large AI models needs to take place on server systems due to the resource-intensive nature of the task. On the other hand, inference can happen at the end user, such as laptops, cell phones, etc. As things stand now, both training and inference predominantly take place on servers. This is why there is such a strong demand for Nvidia's data-centric products. Nvidia's new H100 server GPUs present a monumental leap in performance compared to the A100s. The H100 is nearly 9 times faster in training and an astounding 30 times faster in AI inference speed. Now, we talked about Nvidia GPUs, but let's turn to their data center CPU, codename Grace. According to NVIDIA, Grace can achieve 10 times performance compared to standard CPUs in areas of high-performance computing and AI workloads. With CPU Grace and GPU H100, NVIDIA can combine Grace and Hopper into a single unit referred to as the Grace Hopper Superchip, known as GH200. This combined offering is adaptable enough to effectively manage a broad spectrum of data center workloads devised for CPUs, GPUs, or even a blend of both. Over the few months, NVIDIA has unveiled an array of products and services, each poised to exert dominance over the entire AI landscape. By transitioning data centers from Intel or AMD CPUs to NVIDIA GPUs, customers could accomplish 44 times more tasks while utilizing less than a third of the energy. With the adoption of NVIDIA's new Hopper-based systems, a modern data center could potentially increase its productivity by around 150 times using the same amount of power consumption. Putting it another way, if a company wants to power the same size large language model using NVIDIA system, they only need 4% of the cost. This is why NVIDIA is essentially a monopoly in the AI computing data centers right now. NVIDIA's dominance isn't limited to its DGX H100 GPU systems or the Grace Hopper Superchip. Their modular MGX server platform is also a huge profit generator, targeting diverse data center segments encompassing cloud services, gaming, high-performance computing, big data analytics, manufacturing simulations, robotics, telecommunications, and of course, AI training and inference. NVIDIA has successfully built their ecosystem to support multiple hardware generations within these standardized form factors. This strategy locks their data center clientele for extended periods, as transitioning away from this framework would be very expensive. Over 75% of NVIDIA's quarterly revenue comes from data centers, and I showed you how NVIDIA's dominance in the sector is unchallenged. An additional 18% of their revenue, equivalent to approximately $2.5 billion, is attributed to their gaming division. This segment has witnessed an impressive 11% growth from the previous quarter and a notable 22% surge compared to the same period last year, primarily driven by the successful sales of their RTX 4000 series gaming GPUs. NVIDIA's enterprise software segments contributed to around 5% of their overall revenue. But here's the thing, NVIDIA expects that their enterprise AI software is just as big an opportunity as their AI hardware business is today. Software like NVIDIA's Omniverse is designed as platforms to interconnect diverse professional tools spanning various industries. Omniverse effectively incorporates several NVIDIA technologies we've discussed, thereby enabling the creation of lifelike graphics, scientifically accurate simulations, materials, behaviors, and even lighting effects. NVIDIA's automotive sector is another one worth talking about. NVIDIA's self-driving hardware platform is called Hyperion 9, and it'll support up to 14 cameras, 9 radars, 3 LiDARs, and 20 ultrasonic sensors. Hyperion 9 has the potential for the broader auto industry to collaboratively address the challenges currently faced in self-driving. DriveMap, an ongoing initiative to create real-time digital replicas of every road within their datascope, is another initiative NVIDIA is investing in. By 2024, they envision mapping major highways across North America, Western Europe, and Asia within their Omniverse, amounting to vast mileage of roads virtually replicated. The Hyperion sensors integrated into vehicles can perpetually cross-reference their real-time observations with the corresponding digital twin in DriveMap. NVIDIA's arsenal also includes DriveSim, a tool that transforms recorded driving data into interactive elements, facilitating their reuse in subsequent simulations. DriveSim grants the capability to manipulate the scene, modify elements, and execute a range of simulations, thereby enhancing the simulation environment. DriveMap and DriveSim together can simulate perspectives in specific scenarios. For instance, they can simulate urban streets and visualize how LiDAR sensors would perceive and generate depth maps. This capacity enables the training of self-driving AI using LiDAR data, even if it wasn't directly collected from such urban streets. Now, many of these applications are anchored within NVIDIA's Omniverse, sparking a robust feedback loop across NVIDIA's diverse business sectors. As various industries increasingly demand these services, NVIDIA will continually innovate and refine its hardware solutions to support those demands. This is why I think NVIDIA has a lot of potential from its current level, even as its stock has gone up more than 230% year to date. We should expect NVIDIA's hardware profit margins to decline over time due to competition in the space, but the growth in their software market should pick up, and the margins on those software businesses will be higher than the hardware. Over time, NVIDIA is expected to have an integrated enterprise AI ecosystem that no other company can easily compete with. And that's it for me today. If you feel you learned something new in this video, consider hitting the like button and subscribing to the channel. Your interaction helps me put more effort on trending stocks just like this one. Either way, thank you so much for watching, and until next time, take care.